Good morning, I'm Emily Beckett, Digital Marketing Specialist at Sprague.
And I'm Kristine Sullivan, Wholesale Marketing Rep at Sprague.
Welcome to Sprague's Refined Products Review, where we share what's moving the market and the insights we see every day. So Kristine, let's take a look at what could shake up the oil market over the next few days.
Well, before we look at what the market might do over the next few days, we should definitely review what it did last week when we were down in Connecticut at our sales meeting. Between September 29th and October 3rd, both Brent crude and WTI fell about $5. I'm guessing this was all based on the assumption that OPEC, who had their monthly meeting last Sunday, they were going to bump up production levels. That, in addition to the weekly EIA numbers, there were builds across the board for crude, distillates, and gasoline.
So if the U.S. is producing all this oil, why are domestic product inventory levels at 5-year low?
You're right, Emily. Refinery utilization rates have been at 93% over the last couple of weeks, the highest levels recorded. The problem is the U.S. is also a net exporter of oil, both crude and refined products. Most of this product goes to both Mexico and Canada, but we also export it to European and Asian nations. And that is why inventory levels are at their 5-year low domestically.
Shouldn't lower inventory levels mean higher prices?
Great question. And boy, has that changed over the years. When I talk about inventory levels, specifically, I'm talking about Pad 1, the East Coast. These record low levels become an issue if there's any type of disruption, whether it's weather related or geopolitical. If this happens, that's when we'll see a spike in basis, either in New York Harbor or at your market terminal level. Fast forward to a couple of days ago when OPEC had their monthly meeting, they didn't announce that they were going to increase production in November, but they didn't announce that they were going to cut production in November either. They decided to keep production right where it was at 137,000 barrels per day. And this is why we saw prices creep back up on Monday.
So you mentioned geopolitical events. What do you think will happen if these tensions flare up again? How do you think the market will react?
Well, put simply, the more instability there is across the world, the more unstable prices will be. If tensions do flare up, whether in the Middle East or Ukraine, we will see prices bounce up as traders price in that supply risk, and diesel prices will be dragged along for the ride. The opposite is also true. If things stay calm, the market will keep focused on the actual data.
And what about bioblending? What are you seeing on that front?
The market is keeping steady with low demand for bio. Discount blending remains very limited as the diffs are nearly 50 cents over the screen. Forward rail markets continue to stay busy as the import market is non-existent due to current policy indications.
So Kristine, what about the overall U.S. economy? We're seeing a continued slide in employment and consumer demand.
In fact, we are. At face value, prices will come off, but we know markets don't operate in a vacuum. The other bull factors could stop free falling prices.
What other bull factors are there possibly? Could we see colder than normal temperatures this winter?
Looking ahead, this winter in the Northeast could shape up to be more like the 30-year average rather than what we've seen over the past decade, which hopefully is true because they're already saying next winter is going to be back closer to the 10-year average.
So there was a terminal fire in California last week. Do you think that would impact the Northeast market at all?
As for the California fire, Emily, my colleague Joel, he said it best. He said, any changes in the market affects all markets, but because of geography, most of those changes will be usurped into other markets closer to California, leaving very little impact left on the Northeast.
So bottom line, what's the setup heading into the remainder of the week?
Well, the market remains range-bound right now. Plenty of supply risk out there, but also a lot of uncertainty on the demand side. So I'd expect a bumpy, headline-driven market where sentiment can flip pretty quickly.
Well, thanks so much for joining me and sharing your expertise, Kristine.
Thank you.
Before we go, if you haven't seen it yet, check out our latest monthly feature, an interview with Sprague's co-president, Carl Schmidt, on our YouTube channel now.
That's all for today. Thanks for joining us. We'll be back next Wednesday with another Refined Products Review. Refine your insight.
Feel your success. Well, thanks so much for joining me, Kristine. Let's try that one again.
Yeah, get my expertise.
Your expertise. Before you go, if you haven't seen it yet, check out our latest monthly special feature.
Well, before we go,
What did I say?
before you go.
Oh, I'm out of here.